Insurance typically tries to cover your vehicle in case if it is going to get hit by an accident or if some untoward incidents happen there. All classes of vehicle form under two types of policy. There's a Form A and Form B. Suppose because of an accident, if a person passes away, then it goes into the fatal category. Good morning and welcome to the fifth session in Unit 2, Principles and Practice of General Insurance, where we are going to speak about the motor insurance. Now, one of the most interesting part of insurance that we would like to talk about, especially in the general insurance sector, is the motor insurance. Why? Because every day when you see that the rise in the automobile in terms of ownership, in terms of sales, is constantly growing up. And so is the need for insurance. In India itself, when you talk about the capital Delhi, you see that more than 1 crore vehicles ply on the road on a daily given basis. So this is what we are talking about, the automobile sector, the growth of that particular sector altogether. And every year with new launches coming into the market, definitely the need for insurance is also going to go up in a big way. So let's start understanding what is this motor insurance all about. It originated in UK and England in the year 1864. It originally covers third-party damage. Later in the year 1899, it was extended for the accidental damage also. In India, after the Motor Vehicles Act was passed, the insurance was compulsory after the year 1946. All India Motor Tariff governs the motor insurance business in India. So the origination happened in England way back in the year 1864, and then the accidental insurance claim started up in 1899, and after 1946 in India, with the Motor Vehicle Act being passed, this was made mandatory. Now followed by which it has been governed by the All India Motor Tariff Group altogether. Now what is important about here is that when you buy a vehicle, you are buying it for multi-purpose. For certain people buy vehicle because it's for their transport purpose. Certain people buy vehicle as an identity, as a status purpose. Certain people buy vehicle because of a luxury, for a comfort. So the way how you look at a vehicle is entirely different. But what does an insurance look into it? Insurance typically tries to cover your vehicle in case if it is going to get hit by an accident or if some untoward incidents happen there. So the aim of this motor insurance business altogether is to make you feel comfortable about the factor in case if there is going to be an accidental damage hitting upon, then automatically we will be able to back you up and cover it back. So this is why I would say that this is a very, very important insurance altogether. Now, the loss exposure arising from the automobile accident, which is very, very important. Now, nobody can tell you that what is the cost of an accident. Now, everybody can tell you the factor that accident will definitely lead you to loss. Accident will definitely lead you to some sort of damage. But nobody will be able to predict and tell the cost of an accident. So if you are taking a car today, and you are going to go and hit somebody on the road, or you are going to get hit by any other barricades or anything, you do not know the cost of that accident. You only know that a physical damage has happened to the vehicle. Now, what the insurance companies want to understand here is the loss exposure, to what extent the vehicle's loss exposure is being calculated in the case of an accident. So let's try to understand that. Legal liability for harm caused to others as a result of negligence. This is very, very, very important what we try to say. Why? Because when we talk about the legal liability factors for the harm caused to the others as a result of negligence, we are trying to talk about a different segment, different factor altogether. What are we trying to look into here is that when we talk about the factor of legal liability, the legal liability arises from the very fact that you are trying to cause some sort of problem or the vehicle has gone into some sort of trouble. So there is a second factor called as the bodily injury, where physically the person is injured. The third thing is a property damage or the theft of the vehicle. There are three conditions which you need to understand in detail before you start launching up the insurance factor. The first thing is that what is the legal outcourse? Now, for example, when I'm driving the vehicle and I go and hit somebody, whether it was intentional, whether it was accidental, or it happened just like that, I do not know. I don't want to know also. But what has happened there is that this has caused a damage. This has caused some kind of friction altogether. So you are legally responsible for this particular activity for which you will be charged under the court of law. So what is a insurance exposure at that point of time? How is insurance going to come and claim it so that you will be able to pay back a compensation? The second thing is the physical injury. Suppose there is going to be a physical injury that is being caused because of the accident, then the insurance company should be able to understand the exposure value, the damage value, the cost that is need to be given in terms of your recovery standpoint. So we say the bodily injury is also being counted, followed by the property damage or the theft of the vehicles. Now that is also very, very important. Why? Because if the car gets completely damaged or the car is stolen, then what are we going to do? What is the exposure at that point of time? So with all these calculations in the mind only, they will be able to raise an insurance, because that insurance will be able to tell you at a given point of time, this is what we are looking at. This is what the value you will be getting back in case of any untoward incidents happening. Followed by premium rating factors. What are your premium rating factors? So when I look at those cars there, everything looks so interesting for me. An XUV 500, or when I talk about a Volkswagen Polo, or when I talk about a Brezza, or I talk about a Maruti Alto, all those kind of big cars. And when I talk about, especially about these kind of SUVs and everything, it's becoming interesting in India because most of them want to own those big cars. Now, moment when you talk about those big cars, what happens here is that there is an amount of premium that also gets added up because of the size and the variation of the car. So what are the premium rating factors for us? The first thing that we would be looking here is the driver's class. What kind of driver's class when we are talking about? A rated, B rated. So the driving class altogether. Territorial rating, so which area the vehicle belongs to. Vehicle classification, is it a mid-size vehicle, a big size vehicle, a heavy vehicle, or it's a light commercial vehicle? So we are going to do the vehicle classification. Technical classification based on the capacity of the engine, the power, the horsepower, and all those factors, that is going to be taken into it. The value of the vehicle. So moment when I talk about those big names like BMW, Audi, Mercedes, Benz, and all those big names in the car, the value of the car is also very high. So definitely the insurance premium will also be on the higher side. That's the premium would be on the higher side. The usage of vehicles. So what kind of usage has been done? Is it for a regular transport mode? Is it for some special purpose? Is it basically like a cargo lifting vehicle? So all those kind of calculations will also be looked into. So that is also what we call as the usage value of the vehicle, followed by the geographical area of operation. Where are you operating this vehicle? Why? Because when you're talking about this hill terrain zones, or when you're talking about areas which are risky in nature, or when you're talking about situations which has got inherent risk in its nature, then the vehicle operation also needs to be looked about. And not the least, what we talk about the claims experience altogether. Why? Because if you have already claimed money last time, at least, in your last 5 or 10 years, we have been seeing that there has been a regular claim by your side. That means the company would be even more scary to give you insurance because they know that you are prone to make any kind of accidents. So before we just move further, we need to understand, when we talk about the premiums category itself, premium rating comes with a lot of challenge. So when you go through any of the apps today, let's say that you open a cardekho.com, or when you see a cars24.com, or when you see any of the car application, the online buying process, you will immediately see some fees called as RTO and insurance. Now, the insurance is always done on certain premium rating factors, as we have discussed here. Now, these rating insurance factors have to be worked out. Now, the insurance will not be same for every car. This is a very, very important point that you need to understand even before we start thinking about it. Now, you might come back and say, sir, will that premium be the same for an XUV 500 and that of a MG Hector? No, definitely not. Why? Because if the value of the car goes up, if the technical rating of the car goes up, if the user level of the car goes up, then automatically the premium rating will also be on the higher side. So what we are seriously worried about in terms of this insurance is that whenever you take a vehicle, you need to understand the factors that are involved in it. It is not just enough that you have taken a vehicle, but the exposure, the risk that is inherently built in also needs to be understood. Now, example, when you are starting up a transport business, a logistics business altogether, and you want to take an insurance for a truck, for a lorry, which is on a regular basis, you're going to transport goods from Mysuru to Bangalore or Mysuru to any other places in India altogether. At that point of time, what is going to happen is that the usage value of the vehicle is on the higher side. So the wear and tear is on the higher side. And lorries and truck are prone to accidental zones higher when compared to personal vehicles. That's because it's going to be run by a third person, and there are probabilities that they might hit, they might go off the track, and many things can happen altogether. So what we try to do here is that we classify your premium based on your usage, the type of the vehicle, and the rating under which this particular things have been done. So we want to see in the long run that this systematic way of evaluating actually helps you in terms of finding out how exactly you can take a motor insurance. And that's probably one of the reasons, if you happen to go through any of the online insurance, they will ask you all the details, they will go with the evaluation and then try to give you a insurance altogether. Now, the next one that we are looking into it is the types of motor insurance policy. According to the All India Motor Insurance and Motor Transport Union, all classes of vehicle form under two types of policy. There's a Form A and Form B. Form A is known as Act policy that covers Act liability. Form B is known as comprehensive policy that covers additional losses and damages. Now, what is this Form A and Form B altogether? Is it so important for us to understand Form A and Form B? Why? Because when you talk about this Form A and Form B, we are talking about two categories altogether. Form A is basically an insurance that will cover the Act liability, the basic liability that is arising out of a particular insurance. So which means to say that the Form A will typically try to cover factors that are related to the accident and the general losses that are going to be caused. Now, Form B is known as a comprehensive policy coverage, which will be covering the additional losses or damages. Now, this is the next format altogether. Now, what happens here in Form B is that people take additional coverage because in case other than the accident, due to some natural act, due to some riots, due to some other fire accident or any other reasons, there needs to be a coverage policy which will actually go ahead and cover in terms of all these kinds of incidents. So what we are trying to understand, rather what we are trying to put ourselves into, is that we are trying to go for a Form B, which is even more comprehensive in nature, which needs to be taught in the way it has to be done, which means to say that comprehensive policy will try to give you a better mileage, a better coverage altogether. Followed by the Form A policy. Let's discuss it in detail. Now, as per the Motor Vehicles Act, all vehicle plying in India must possess the Act policy. That is, this is the fundamental policy that every vehicle in India needs to have. So, Form A is mandatory in nature. You cannot avoid the Form A. Now, violation of this, sir, if I don't carry an insurance, what can be done? Violation of insurance is punishable offense with fine. So, which means to say that if you have not taken the insurance, you don't have the proper documents, and you are caught by the police, it leads to a violation of law, so you will be penalized for it. So, Form A is mandatory. It has to be there with every vehicle. The policy covers third-party damages, bodily injury. So, in case when your vehicle goes and hits, or it has been hit by any other vehicle, and because of which there is a damage for your vehicle as well as for your body, the physical injury part, the Form A will be able to cover it and take forward. That's what, as per the Motor Vehicles Act, we talk about. So whenever we are talking about the Motor Vehicle Act, this is what comes into picture. So the Motor Vehicle Act will tell this is the challenges, these are the problems. So this is why we are getting into the Motor Vehicle Act. Now, the period of policy is generally 12 months from the date of inception. Now, most of the people always ask this question: how long is the insurance policy all about? The insurance policy is always about 12 months. The insurance policy is normally for 12 months. So, whenever we talk about this insurance, the time period on which this insurance is taken is normally for 12 months, that is 1 year. So every year you need to renew your insurance. Now when you say that you have to renew your insurance, that means there is going to be an increase in the premium. As the vehicle gets older and older, you need to start taking up premium at a higher rate altogether, and it is mandatory for you that you renew your insurance at any given point of time. Every year you need to make a note of that the insurance is renewed. Followed by a Form B policy. What is a Form B policy? It's an optional cover. So first let's try to understand this word very, very clearly. Optional cover. That means it is not mandatory. You feel that if there is something extra, something more than the normal policy, you will switch on to the optional cover policy, which varies with different classes of the vehicle. So it will not be again same for all kinds of vehicle. An SUV might have a different option, a normal sedan car will have a different option, a hatchback will have a different option. So it is an optional cover that we are giving. For private cars and motorcycle, there are 2 sections, whereas commercial vehicle, there is an additional section. So for the normal private vehicles, that is in the 2-wheelers and the 4-wheelers, there are 2 sections under which you will be able to take. For the commercial vehicle, there will be an additional section, which means an additional coverage value will come. Section 1 is a comprehensive policy. Loss due to fire, explosion, lightning, earthquake, flood, all this factor will be taken, including theft and burglary. It also covers the protection and the removal cost, authorization cost. Now, these are certain new things that we have to learn, which means at any given point of time, whatever is the factors that is involved with the removal factor, the authorization factors, or with the theft, burglary, earthquake, any of these kind of things will be covered with this optional Form B policy. Now, the motor insurance claim. So, how do I go and claim my insurance? This is very, very interesting for all of us to know. Now, God forbidden, we don't go for any insurances in our life. Let's assume that things are going pretty much normal. We will not go and claim any insurance. We will try to own things by ourselves. But then what is the challenge? What can be the challenge for us when an accident happens is that own damage claims. First of all, you have to understand, acknowledge whatever is the damage that has happened. Now, most of the people do not understand what exactly is the damage. So they are not able to give a clear picture to the company, to the insurance company, stating that what exactly has happened. When you just write it down on the paper and say it is only an accident, or it has been only an X or a Y, they will not understand. It is very important for you to go forward and tell what are all the damage effect that has taken. Is it been hit? In what angle it got hit? How it has got hit? Which part of the body of the vehicle has got hit? And all these factors have to be mentioned. The theft claims. So you will be, in case there's going to be a burglary or something, you need to again give a detailed report with the police FIR saying that this is what has happened to my vehicle. My vehicle has been stolen away. So then you will be able to do the theft claims altogether. Now, the third party bodily injury claims, fatal and non-fatal. Suppose because of an accident, if a person passes away, then it goes into the fatal category. Suppose because a serious injury or something where it is not a risk to the life altogether, we will talk about the non-fatal factor. Now, what happens here is that the third party insurance makes you understand very, very clearly that there has been situations where the insurance has to be claimed because of some sort of damage that has happened to the body. The physical injury has been caused. So the insurance will also try to cover it based on the clear-cut assessment of what has happened and how much they need to take in position altogether. So based on all those factors, they will be able to assess the situation and give you the claims altogether. The normal time to process a claim is anywhere between 48 hours to 72 hours. So within 2 to 3 days, you will be able to get your claims back. Now, the own damage claims. What are the documents required? You need the claim form, you need the registration certificate and driving license, the FIR copy, fitness certificate, trip sheet, survey report. So just look at what are all the factors that we are talking about. So you are starting with the claim form, the basic claim form, where you will be filling in the details, telling the person what are all the things why I am going to claim an insurance here, followed by the registration certificate. The RC book is mandatory with the driving license. These two things form a very, very important part, followed by the FIR copy. So you're filed with your police saying that first information report, this is what has happened, followed by fitness certificate, which means whether the vehicle was in proper condition at the time of the accident, followed by the trip sheet, how much it has been traveled, how many kilometers, the survey report which is given up by the insurance company stating that this is the condition of the vehicle was in this situation, this has all been the assessment altogether. With this, I come to the end of this particular session. I hope and believe that all the information that has been shared through this session is of a great help and resource to you. In the upcoming sessions, we shall try to understand more about the general insurance. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.